Welcome back, Alpha Hunters. The markets are closed for the week of July the 21st, and let's get going with what went on this week. Monday morning, we had a nice little flat open from last Friday's close. Basically, just traded higher. Saw a little bit of a sell down right there towards the end of the day on Monday. Tuesday, nice little gap down, very subtle, not much kind of going on, but we just kind of traded higher most of the day on Tuesday until we got to the end of the day again. And then on Wednesday, nice little gap up. Kind of had a little double top action here on the S&P 500. We traded back lower, ending off the session highs, but right around the open area. Thursday, nice little gap down, traded higher, kind of got neutral for a brief period of time, then traded back down, had a nice little rally going into the middle part of the day, and then kind of rolled over and just traded lower as we kind of went into the end of the day. Friday, nice little gap up, traded down, and then just kind of chopped sideways basically the rest of the day. Hitting the highs basically 3 times, but definitely that last hour and a half, 2 hours, rolling back down, ending on the session lows right at the end of the day. Now, one thing that we did have a flurry of this week was earnings, and we're going to have a lot of earnings coming up this next week, and we'll get into talking about some of the stocks that had earnings this week, and are they a little foretelling for what's coming up this next week. Taking a look here at sector rotation for the week, and we can see that the XLC and the XLY were hugely underperforming this week compared to the general market. We also had tech underperforming and real estate underperforming. And just outperforming the market this week was materials and industrials. Industrials, the XLI, materials, the XLB. With the XLP staples outperforming, financials were outperforming, utilities outperforming, energies outperforming, and healthcare outperformer for the week. So this week we definitely saw quite a bit of that switch from risk on, like we have been seeing for the past several months, to risk off, especially on days Thursday and Friday. Both days the market was actually down pretty good, but you'll notice tech was actually outperforming on Tuesday. Even going into the end of the day on Wednesday wasn't even too bad. But then you see it drop off here. This light blue line is what I'm looking at. Dropped off pretty good on Thursday and Friday to end out as the third biggest underperformer for the week. And the XLC and XLY, well, those hold Meta and Alphabet in the XLC, and the XLY holds Amazon and Tesla. Tesla did have earnings this week, and you can see the XLY actually was underperforming, but you can see it really dropped off there on Thursday. So we'll look at a couple of those stocks a little bit later. Take a look here at the Federal Reserve balance sheet data that came out Thursday after the bell. We can see it ticked higher a little bit by about 2%. So we'll see if it continues to go higher or if it starts to come back down like it had been the previous 4 weeks up until the past 2. The VIX for the week mostly just hung around the lows that it's been in for the past about a month and didn't really do a whole lot, just kind of went sideways mostly for the week, which we actually did see the market turn over Thursday and Friday, but we didn't see the VIX start to move up all that aggressively. And what's kind of interesting, we actually did see the VIX move up a little bit on Wednesday. Take a look here at the DXY, the dollar index, and last week I kind of mentioned watch out for this 101 retest. You're probably going to want to take this bearish off of this retest, and it moved into the 101 level on Friday. Now, what's going to be interesting is this next week on Wednesday, the FOMC is going to come out and give their most likely 25 basis point rate hike decision, which would possibly send this back up. So if Monday and Tuesday this thing is just moving sideways and then Wednesday it starts to push higher, I'd be a little bit careful here, but I can understand and taking a bearish position here on the DXY and taking a shot on being bearish on the dollar. I would probably have a stop loss up top here over the late May high. And if it does start to break up and get above 102 and you're not feeling too confident of it, you thought it might have rolled over, I could see maybe lowering your stop loss to right above these highs from early July. Take a look here at the 10-year yield. Nice little pull down Monday, Tuesday, and Wednesday. Nice pop on Thursday. And Friday, nice little lower wick there, possibly setting up for a continuation higher. So we'll see. I know we're going to get the FOMC on Wednesday, so we'll just have to see what happens with rates coming into this next week. Take a look at the 10 to 2 inversion, just kind of pulled down a little bit every day. Not too much was going on here, so we'll see what this looks like next week. The HYG, the high yield corporate bonds, Last week we saw a very nice push bullish. We actually popped above past several months of highs, and we didn't hold it, but I said there's two scenarios you're probably looking for to be bullish here, because right here is not exactly the best spot to be bullish. But if we got one of these two scenarios, one is a pop higher, a breakout definitely above the April highs, and then we retested into those, carry it higher. Or if we sideways consolidated here, the moving averages came up, carried it and pushed it up, that I would take bullish as well. Same kind of situation here for the LQD. LQD last week popped and it kind of just mostly consolidated sideways. A little bit more of an uptrend here for the LQD. So either one of those situations, if we get a little bit more of that sideways consolidation action, I would be looking to probably take that bullish. But if we start to break down probably under this July 17 low, that would be probably a deal breaker for me. So just kind of keep an eye on some of that, because we do have quite a bit of gaps here, and we also did move pretty rapidly last week higher. So if we don't continue higher here soon, then it might lose the momentum and come back down. Taking a look here at options change week over week, and well, we can see there was quite a bit of options kind of being entered into the system over the past week. See a lot of calls and puts being entered for August 18th. As well as September 15th for puts, also September 1st for puts. August 4th had quite a bit of puts as well. And then you notice November 17th, there was a lot, and I mean a lot of sellers out here for November 17th options, especially on the call side. So it seems like investors are expecting the market to be a little toppy here and are collecting premium for what they probably think the market has a little bit of an overextension to the bullish direction. All right, so this past Thursday morning, we did get the sentiment survey that came out, and it came in at 51.4% bullish, a new one-year high. And this was something that I mentioned off of last week's video after we were already kind of moving bullishly, breaking out last week on Tuesday and Wednesday. But the survey last week came in at 41%, so I was kind of really curious to see how it was going to come in this Thursday after we continued the breakout into early parts of this week, and you can see it came in quite high. Another thing you also notice is the bearishness actually dropped off pretty good. About 5 weeks ago, I think it came in somewhere in the 22% area. This week, it actually came in at the 21.5% area. So a lot of the bullishness out there in the marketplace for now. So we'll just have to see if that holds up. Checking out the Fed Watch tool for this next Wednesday's rate hike meeting on July 26th. Looks like it's going to be about 100%. It is basically locked in with a 0.2% chance that it doesn't happen and we hold. For September, the rate odds for a rate hold at the higher level are the dominant one. For November, the rate odds for a hold at the higher level is the dominant percentage, and the same thing here for December. The rate odds for a hold at the higher level is the dominant percentage as well. If you haven't heard, the NASDAQ 100 is going to be doing a special rebalance that is going to go into effect Monday morning before the market opens, and it is going to look something like this. All of these stocks are going to drop. Just understand that Alphabet actually has two of these stocks, the GOG version and the GOGL version, but they are weighted the same. So I just want you to be aware that there are some rating changes coming, but I didn't see how these weight reductions, where the balance is going to tick up for other stocks. I don't know if it's going to be that scattered across the other 93 stocks, or just how the new weights are going to impact the other stocks. So Netflix had earnings this week, and it moved bullishly from Monday, Tuesday, and Wednesday. Tuesday was a very nice, strong move in the bullish direction. And then they had earnings Wednesday after the bell. And really, the earnings weren't bad, but what had a lot of analysts kind of disappointed, or investors disappointed really, here was how much of new subscribers they got. There was only an 8% growth. I think a lot of analysts and investors were expecting a little bit higher growth here, as over the past quarter or so, they've been cracking down on password sharing, but I don't think they got as many of the follow-through subscribers as they were expecting. Now, just in my opinion, I don't think Netflix is a short or a bearish play, mostly because to me it's just kind of a cash flow company now. I don't think it's anything like a growth stock, especially like what it used to be. So to me, it's just kind of like a hands-off. If you want the cash flow play, that kind of stuff, I think it's an okay play, but I don't think it's a growth stock anymore. I don't think it will ever get back to that. but I could definitely see it pull back quite a bit. And one area that would make a lot of sense is probably around the 380 level to 370, somewhere around this high that we put in back in February. I would like it quite a bit there. TSLA. Now, this is one that I've been quite amazed of how bullish this has gotten, especially over this past quarter. During May and June, it was extremely bullish, but it did have a pretty good breakdown this week, especially on Thursday and Friday. They also had earnings Wednesday after the bell. And really the main thing to know here was Elon Musk kind of mentioned that he could see margins being kind of silly going forward. Now, there's a couple ways you could take silly as, does he know what they're going to be going forward, or are they going to kind of be coming down? Now, this is something I've been kind of talking about. I believe margins are going to continue to deteriorate, especially in the areas of big tech, where they have been extremely high for a given period of time. They also came in a little under for the operating margins part of their income statement. So there is starting to be a little bit of sign about some of these margins being an issue for some of these tech companies. The first semiconductor stock that we heard from this earnings cycle happened Thursday before the bell, TSM. So that's what made Thursday such a bearish day, is because Tesla, Netflix, Wednesday after the bell, and then TSM Thursday before the bell. So all that happened on Thursday's trading day. And I think TSM probably gave us the biggest insight, as they kind of talked about margins continuing to contract, and also they lowered their forward guidance for the year-over-year revenue. So that was a big tell, and that's a big sign, as some of their main customers are AMD, Nvidia, and those kinds of semiconductor stocks are what we think of semiconductor stocks. So I'm still looking for some of these pullbacks on some of these stocks, but I'm not going to be playing them bearish all that much. I'll just be looking for opportunities, as probably some of these stocks look to pull back here over the next 6 to 8 months. Last individual stock I'll talk about here is Meta. Meta didn't have earnings this week, but they will have earnings coming up this next week. But they had some pretty bearish days on Thursday and Friday. And over the past several weeks, I've kind of been mentioning anywhere up in the mid 290s to really kind of filling this gap from way back, January, February of 22. We had this huge gap down. This is from Q1, back then. So we finally got there on this rally, this monstrous rally that it's had all year. So we kind of finally filled that gap. And really, this would be a great time to be taking, if you've been bullish, take it off the table. If looking to get bearish, well, we just formed a pretty nice double top here over the past 2 weeks at a pretty good resistance level. And you can see just how much volume came in on Friday's session, and it didn't even have earnings yet. But if you want to take a look at this chart on a weekly, you can see it had a false breakout this week with a one black crow body kind of forming up here and actually closing below the open of last week's candle. So what could be interesting here on Meta this next week is they could have a pretty bearish week, especially if we do see tech stocks continue to sell off. And I would actually highly suggest keeping track of some of these weekly charts for some of these tech stocks as well. Looking here at the RSP, the equal weighted SP 500, nice bullish move Monday, Tuesday, Wednesday. Thursday, a little bit of a pullback, nice little lower wick. Friday, open, nice little gap higher, a little bit of a lower wick on the day. Be curious to see kind of what goes on here. That's kind of the whole rotation, right, that we saw throughout the week when we were going back and looking at that sector performance. Really, it was just the big tech stocks that were really kind of weighing on the market this week. Most of everything else was up. Most of everything else was bullish for the week. So the RSP doing well because all the other stocks are doing well. The DIA, the Dow Jones Healthcare, continued to have earnings this week, continued to push higher, breaking out. This is a very solid breakout. I would expect dip buyers to be coming in on any kind of pullback, especially down into the mid 340s. So be watching for that. The IWM had a very nice strong push Monday and Tuesday. Wednesday, nice little doji right here, kind of at a top spot, I guess, or at least the top for the week. So I'll be curious to see kind of what happens here going forward. But I had mentioned before, if we do break out higher, look for the pullback into probably like the 190, 189 type area. I would still probably be looking for that, but I would have a stop loss all the way back down here if you do try to do that, because if it comes down, just goes right through everything, probably just going to keep going. But I do like that setup. I do like the 190 area, the 189 area. I think it still looks pretty good for me to be bullish. The Qs. Well, okay, Monday and Tuesday, a little bit bullish. Wednesday, a nice little doji, just like the IWM. But they had a much more bearish Thursday and Friday. So we did see a pretty good rotation of those bigger tech names, especially on Thursday and Friday. So watch out here, especially if they start to break below this low that was put in back in late June. Because in my opinion, the Qs have a lot to give up here, as it has a huge weighting into those big tech names. So yeah, I would just be mindful here. And even on the weekly, forming a red candle on a week. I think this is the only major indices for the week out of these 5 at least that did that. So be kind of careful here on some of that big tech heavy concentration type of ETFs or sectors that you monitor. The SPY had an okay week. It was definitely not as bullish as some others, but not as bearish as the Qs. We definitely did move bullish Monday, Tuesday, and Wednesday. Thursday, nice move down, but we did have a pretty strong gap up on Friday, but not looking nearly as bearish as the Qs. So I think it might be okay, but I think the Qs might be taking it down with it, especially if big tech continues to struggle with earnings. I would expect big tech to actually continue to struggle with earnings, as they kind of continue to have margin compression issues. And even TSM kind of talking about the issues with revenue going forward. So if they're downgrading on revenue, then we really got to wonder how some of the other big tech stocks are going to be doing. And I get it, everybody likes to be a fan of the big tech, but you just got to understand sometimes it's good to be in and riding the bull, and sometimes it's just not. And you might not want to be bearish. I totally understand that, but you know what? Sometimes it's just good to be protective of your capital and just sit on the sidelines and wait for real situations and real opportunities to set up. So Alpha Hunters, have a great weekend. Take care, and hopefully tech does not crush the world this next week. Alrighty, take care, Alpha Hunters.